know, in America, we have an old saying. It goes, this is the first day of your new life. You will never view financial markets the same again after this course. That's a promise. You will learn where the market is at any time in its cycle. And it's important because every stage of a cycle has a different trading or investment plan. So you are about to go through this life-changing experience, learning about financial markets, and also because you're going to begin to forge new relationships with people who share the same passion about market timing, discussing financial markets, analyzing financial markets, making trades, taking risk in financial markets, which you're going to find out in the next 2 years as you get to meet one another, correspond with one another, interact with your teachers, your mentors. You're going to find that you're going to develop lifelong bonds with those who share this very same passion that you're about to enter into today. And let me say this too, that your journey into this mind-blowing realm of market timing may end up being similar in many ways to my own. And for you who don't know me, I'm Raymond Merriman. I'm the godfather, if you will. I'm the elder statesman of this work on cycles that you're being introduced to today. And from cycles, we're going to go into financial market timing. We're going to go into geocosmics. We're eventually going to go into chart patterns, technical analysis, price objectives. There's so many things you're going to learn that it does take almost 2 years to integrate it all, to understand each step and how it works with the other step, and develop a prioritization of steps that you need to take, that I had to learn how to take in order to put on a trade, in order to put on a position, in order to make an investment. You're going to learn there are 3 basic steps to being successful in trading and investing. The first step is developing a plan based on analysis that's accurate. What I mean by accurate, accuracy for us means historically, these conditions, these factors have happened 80% or more of the time with either reversals or trends in financial markets. You're going to become very excellent at spotting those things and knowing what those correlations are as a result of what we teach you and a result of what you find out through your own research in these studies that we give you. And so the first step is developing the plan for trading or investing. Okay, you've got to have an excellent plan. The second step is recognizing when the factors that led you to that plan are in place and executing the trade. That's very important because if you have everything set up and you don't take the trade, you miss the opportunity. Yes, not every trade is going to be successful. You don't have to be successful in every trade. But if you're successful 60, 70% of the time, and you apply the third step, you should be very successful as a trader or investor. And the third step is probably the most important of all. And that's once you've got the trade on, you must manage the risk. I cannot tell you how many times I've experienced it and other people I've worked with where they've had 9, 10 successful trades in a row, and the 10th one wasn't successful. And instead of stopping themselves out, getting out of it when it was evident it wasn't going their way, they stayed with it and made it, into a large loss where all those gains were lost. And it's so true about life as it is about markets. You go forward in life, your life improves in steps. But when you make one major mistake, everything is lost. It's the same thing with the relationships. It takes a long time to build up trust with somebody. But as soon as you violate a term of that relationship, the relationship's gone. It takes a long time to build it back up again. Same thing with financial markets. So we're going to train you in skill 1. You should do very, very well with this program in learning how to look at and analyze financial markets. You're going to become an excellent market timer and an excellent market analyst if you want through this course. Now, with that introduction to MMA and MMTA, I'm now going to introduce you to the new director and the main instructor of the 2027 class, which is MMTA4, of which you are now joining. So it's my great honor and my pleasure to introduce you to Vivka Held. I would also say that, let you know that she is now the editor of the new MMA Cycles Tech Report that comes out every month, as well as being the head of MMTA4. So Vivka, I'm going to turn this over to you now, and if you would, please share with us your journey into MMA and market timing, how it's affected your life, and describe to us the goals that you have for yourself and for the students of MMTA4. Vivka?
Thank you, Ray. Thank you for that incredibly kind introduction. It's my absolute honor and privilege to be here with every one of you today. And while I was preparing myself during the last week for starting this program, I was thinking that around this time last year, we were all in Lake Bled, actually. It's pretty much a year ago. And I still remember when you and Johnny handed me the certificate of completion for MMTA3. And I still have this picture, and I was smiling so much, as if I had known that this was not the end of something, of MMTA3, but really only the beginning of everything that is now to follow. And it's so funny that you mentioned that saying in the beginning. The rest of your life starts today, right? So that's how I feel today. And it's probably one of the proudest moments because I had never thought 3 years ago that I would be here today with all of you and heading this program. But here we are. So more importantly, MMTA has allowed me to approach my own investments and trading with so much more clarity and has opened up a whole new career path for me. And this allowed me to shift my life into a direction of independence and financial freedom. And I think this is something that a lot of people are striving for more than ever in this sort of world environment that we're in right now with so much uncertainty. And we're combining so much expertise, so much knowledge, so much experience of so many people who have been working with Ray and Ray's methods for such a long time. It's almost like compound interest for this rendition of MMTA. So, and you're benefiting from this because you're here today and you're going to be with us for 2 years. And really our overall goal with MMTA4 is to educate students on the vital and valuable tool of financial market timing. And in traditional financial analysis, most people focus on the y-axis of the chart, which is the price dimension. For example, in fundamental analysis, you focus on the value of a company that you determine based on the company performance, P&L, other factors. And then you can have that as a way to analyze whether the stock price is low or high, or whether you should buy or not. Is it a deal or is it too expensive? So focus on the price. Or if you look at technical analysis, which also focuses on chart patterns and indicators in the price dimension of the chart. In market timing, we not only focus on the price, but we first and foremost examine the other dimension of the chart, which is the x-axis or the time dimension. So this is what we're going to dive in the MMA methodology. And we're going to do that using market cycles and geocosmics. And we're going to use advanced technical analysis like price objectives, divergences, support and resistance, and many more to add the price dimension into the analysis. We will start with the when, and then we're going to later add in the price to the equation. So in fact, actually, the methodology is the strongest when all these factors align. However, most of the time, we as analysts are not so lucky that they do. In fact, most of the time, they don't perfectly align. And that is what MMA methodology is also teaching you, how to handle and navigate that situation if it doesn't align perfectly. And you can still derive a trading and investment plan and make the best scenarios out of these contradictory factors. So we're going to give you priorities and rules to synthesize everything into a plan that can inform your own trading and also your client's trading and investment decision. So the first objective that we have is to identify market cycles and time bands when crests and troughs are due in cycles. That's what we're going to look at first. That's the basis. That's what Ray mentioned also earlier. This is really the foundation of the MMA methodology. That is course 1 that we're all going to go through now. The second step is narrowing down the time bands that we derive for those cycles using geocosmic studies. So these time bands can be large. They can be days, weeks, months, years. But when would be time periods within these time bands where the probabilities are really high? And that's what geocosmics will help us with. And that's really an edge that not many people have in the markets. The third objective is then to teach you how to use technical analysis to help find confirmations that the cycle is completed and the new one is starting. And the fourth objective will be to teach you how to develop trading and investment plans based on that analysis that you're doing with all of these steps. So a secondary purpose of MMTA, if you will, is also to prepare you to become a financial market analyst, if that is your desire, and who is specialized in market timing. So that's a niche, right? Not many people have these skills. So whoever has ambitions to become a professional in the financial industry, or maybe we have already people here who are, this program will add valuable skills into your arsenal of tools. And then this program will certainly also help you to enhance your individual trading skills. So based on the concepts that you will learn here in the two next years. So with all of these goals, our roadmap looks like this. We are at the start now with course 1, the basic market cycles. And then in courses 2, 3, and 4, we will look into the geocosmics, or I like to call it the secret sauce. That's really the secret sauce of this methodology. And all of this is focusing on the when to buy, the timing aspect, the x-axis of the chart. Then we're going to take a break, and then we're going to start with courses 5, 6, and 7, which we will really deep dive into advanced technical analysis, floor trader methods, all of that good stuff. And then in course 8, we're going to put it all together in investment and trading plans, and we're going to teach you how to write professional market analysis reports, just like we publish in MMA every day, every week, every month, every year. And that will focus on at what price to buy. And if you have those 2 dimensions down, then you are, I think, very well equipped to become a great financial market analyst. So this kicks off our course 1 in MMTA4, cycles and patterns in financial markets. And in this course, what you will learn is first and foremost the language of market cycles and the structure of market cycles. Those are really the basics, and we need to go through this because we need to speak the same language and we need to have the same understanding of market cycles. We really need to deep dive into those and have the same understanding, speak the same language, because then we can go on and then we can find cycles in any market. We will actually have Johnny come in at that point and teach us how to find a cycle in any market. I think Johnny has discovered a lot of cycles, so you will be in good hands with him there. And then we're going to move on and look at various financial market cycles. We will go through the stock market, we will go to the currency markets, we will go through the metals, and we will have all the MMA analysts come in and tell you about their specialty market and the market cycles in this market. And then we will also learn how to identify cycle phasing. We will have Ulrich come in to talk about the cycles pyramid, which will help you a lot in determining what cycles are active, and also how we can use these whole concepts to see when a trading or investment plan is activated. So this will be your very first step in your journey to becoming a financial market timer. And as Ray is used to saying, may your experience be both enjoyable and valuable. And with these words, I would like to kick off lesson 1 of MMTA4. We're doing this now. That's the start. So the terminology of cycles, that's the first lesson here. And for this, we have a treat for you because we thought it would be nice if we use this first lesson to introduce all of the teachers, mentors, and alumni students to you as well. And all of them will present to you one of the glossary terms in lesson 1. And with that, Ray, I want to hand it over to you because you're going to do the first introductions, right? And for our first teacher to continue with the glossary terms.
Very good. Okay. At the beginning of every lesson, every course actually, we're going to put this on the screen. It's a disclaimer and the appropriate use of course information. You can read this on your own terms, but it's something that we have to for a compliance in the field of financial education. So we're going to go into what is a cycle? Okay, this is a course on cycles and patterns in the indices. And before I tell you what a cycle is, I'm not going to actually do it. I'm going to have Wyatt do it, Wyatt Fellows. So like Vipka, Wyatt is another clone when it comes to cycles analysis. Those two, I mean, it's just like they're inside of my head. When I read their reports, it's like I wrote them, except it's even better when they write it. So I want to say that Wyatt has an excellent grasp of MMA methodology. His father was a graduate of the first course, Steve Fellows, back in 2013, 2015. And I think he excited Wyatt to take the next rendition we had, which is in 2021 and 22. Wyatt is the analyst, the grains analyst, corn, soybeans, wheat. He runs a family farm in Wisconsin. He's such a good analyst. I've asked him also to do the gold market because that's something that I want to have updated in a language that I understand clearly every week and every month. And he's done an exceptional job of being our gold analyst as well as our grains analyst. He is the next president of MMA, so be kind to him, be respectful. He's very steady, he's grounded, he's a thoughtful person. He's the one that's, I trust to continue the legacy of cycle studies and market timing analysis we're building here at MMA. So what I'd like to do is turn this over to Wyatt now. And Wyatt, if you would, just a couple brief words about your journey into MMA to inspire those who are listening, and then tell us what is a cycle. Wyatt?
Thanks, Ray. Yeah, and honestly, it just dawned on me. I believe that wasn't Rob and Ulrich part of that first MMTA?
Yes.
Yeah, so I was just seeing
Rob,
one and
Ulrich,
thinking
and Pat. Yeah.
Yep. Okay. So yes, that's like Ray said, that's when I first got exposed to MMA and the methodology, and it just grabbed me then. So when MMTA2 came around, I jumped at it, and it's something that I find very interesting, and I feel that it fits my style and the way I like to look at markets, analyze markets. So yeah, and like Ray had mentioned, I do run a family farm now. I'm actually graduated with a degree in mathematics to teach high school, which I turned down to run the family farm, which honestly has been very helpful, taking MMA methodology and utilizing it for grain marketing to help run a profitable business. So without further ado, though, I will tell you what a cycle is. It is a phenomenon that occurs consistently at regular intervals of time. So I'll turn it back over to
Very
Ray.
good. Okay, thank you, Wyatt. Okay. Next, I'm going to introduce you to Puyan Zulfagarnia. He's a visionary of MMA's future. Puyan has a clear sense of where this company and where this methodology of market timing and cycles analysis can go as we're entering this age of AI, which I've called the technological renaissance. And here we are, we're in the age of AI now. Puyan is an excellent cycles analyst when it comes to crude oil, silver. He is the editor of the MMA Cycles Plus, which comes out every month. He is the future of MMA's mundane world outlook. He's an excellent mundane astrologer who's going to be contributing more and more to the mundane part of the annual forecast book. So without any further ado, Puyan, I want to bring you on to give us a short introduction, how you came to MMTA, what it's meant to you, and then in your own words, tell us why consistency is an important part of the definition of cycles. Puyan?
Thank you, Ray. It's a pleasure to be here amongst some great colleagues and seeing some past students and recognizing some of the new students. It's going to be very exciting to be here with you all. Um, I started, I first heard about Ray around 2020 during lockdown. I was always very interested in astrology. And as soon as I started to read Ray's free weekly reviews, I immediately connected with his methodology. It resembled the same way I carried out my own research. And what really caught my attention was the focus on financial markets. At the time, I thought I was going to pioneer the correlation of astrology and financial markets. And then suddenly I came across Ray and realized I'm about 40 years too late. So just reading Ray's reports blew my mind away. And I was in the right place at the right time because the way the world was and with the development of technology, we were able to then start MMTA4 in 2021, September 2021, using Zoom as we are using it today. And it was a great opportunity because I can't see how else I would have been able to have done that course. And I can't reiterate what an amazing experience you're going to have over the next 2 years. And I'm just going to take 1 minute to explain one of the most important things that Ray taught us right at the end of the course. When we graduated in September of 2022, he explained to us that the cycle that will transform our lives and build true wealth for us will be the 18-year economic cycle. And you guys have picked the right time to do this course. You're going to be experiencing that 18-year cycle. And hopefully, with the guidance of everyone around us, it's going to be an incredible experience. It will transform your lives. If you're prepared and you dedicate the time to this methodology, you will understand it. In 2022, there were a number of significant cycle troughs forming at that time. And in the crypto market, the 4-year cycle formed shortly after we graduated in around November. And that has really transformed my life. In a short period of time, I've made more money than I've ever made in my entire life. I would never have made this amount of money working. in a job. And when that happens, it gives you a great degree of confidence in the system. And I just wanted to share that story with you, not to brag, but to try to demonstrate the importance of what you're about to learn, and especially the timing that you're going to learn it as well. So without further ado, looking at consistently. So every cycle needs, for it to be labeled as a cycle, needs to have consistency. And we measure that consistency by saying that it has to have 70 and preferably over 80% consistency in terms of that specific occurrence reoccurring.
Very good. Thank you so much. I think that's really a good point you made too, that the people with us in this course are very fortunate in many ways because we are going to be in the center of the 18-year cycle, which is a generational opportunity to build wealth through the stock market. If you can, time that well enough, and we don't need to get the very bottom. I'm quite happy getting it as we're going toward the bottom and as we're coming out of the bottom. Most of the time when you go to hear people in the stock market, the salespeople of the stock market, they're usually telling you, they're usually not telling you when to buy until the market is already a third of the way over. Well, a third of the way over the 6-year cycle means it's 6 years later before they start getting bullish. And they don't have you take the profits at the top. They're usually about, a third of the way later. It might be 4, 5, 6 years later before they realize, well, that was the top. We need to be getting out of the market now. So they tend to get you in around the middle and out in the middle. So we can do better than that. If we can get you in earlier when that cycle is bottoming and out earlier when that cycle is topping, you'll make more profit than the slight gains you make by getting in the middle and out in the next middle. So thank you for bringing that up, Fuyan. Now, the other part of the cycle's definition, besides consistency, had to do with the regular intervals of time. And for this, I'm going to introduce my first real protege in the financial markets timing. He came to me in 2015, I believe. He was just getting out of college and working with a wealth building company after getting his degree from University of Michigan in economics. But he had come across my books, the Ultimate Book on Stock Market Timing, volumes 1 through 5, and it got him. Just as it got me when I was writing it, it's got many of you, it got Gianni. And so Gianni contacted me and he wanted to learn. He wanted to learn. I hadn't taught in 4 or 5 years, but he had such enthusiasm and he was so bright and refreshing in his, in his whole being and presenting himself. I thought, I really want to help this person. I really want to work with this person. And so I love Gianni. He's young, and to me, he's a true Renaissance man. Now, he may credit me for changing his life, but Gianni, I want you to know, you've also changed my life as my protege, and the value you brought into my life. I'm so honored and pleased that we had that meeting in 2015, developed this relationship after that. In fact, afterwards, you were the first person I chose to lead the next rendition of MMTA, which was in 2021. We started talking about it in 2020. 2021, we launched it. You also did the MMTA4. So Johnny is an excellent analyst. He covers our daily reports, several of our weekly and monthly markets. He's a wonderful, kind, friendly human being. He's an excellent teacher who understands the macro and micro features of financial markets, as well as anybody in our group. And he's living proof that you can be a nice person, a good person, a kind person, and still be successful in the competitive world of trading, which, by the way, when you get in the competitive world of trading, you're competing against the top minds in the world. Believe me, these are not dummies who make money at trading. You're competing with them. But unlike a lot of them, Johnny is one of the good guys. So Johnny, if you would, please share a moment or two of how MMA has affected your life since you came in, and then tell us, in your words, the importance of regular intervals of time in cycles. Johnny?
Thanks, Ray. Well, here we are again. It's crazy to
Yep.
think that we have a new group of students, and it's so great to see old and familiar faces. Unlike some of the other members in the faculty, I've had the pleasure of meeting most of the new students. If you have not spoken to me yet and done your interview, please send me an email. I know we had some people that joined today, but Ray and the rest of the group, we have a nice group coming in this time. So I'm very eager to see what we have coming out of this course this time around with all of our new and impressive students. So welcome everybody. Like Ray mentioned, we met back in 2015, and it's pretty easy for me to say that it was a very fated encounter for myself. And I've used this line before when describing my relationship with Ray. When the student is ready, the teacher appears. And Ray appeared at the moment when I needed him to, and it's been very fruitful and very wonderful, and I know there's much more greatness to come. So, needless to say, MMTA really changed my life. I started off in the financial services industry. I still do this all the time. This is what I live, breathe, and what I do on a daily basis. I'm always trading. I'm always analyzing the markets, and without an understanding of time, like Vibka said, looking at the x-axis, understanding the geocosmics, where we are at a symbolic level versus just a cyclical level, I think adds a lot of context to where we are going in this world, and it's very exciting. And like Puyan said, the opportunities to completely transform and revolutionize your financial picture. It's never been better. So I'm really excited for all of you. It's great to be with you. And when it comes to regular intervals of time, okay, this is something that occurs 80% of the time within a range of 1/6 of the mean periodicity. Okay, and that 1/6 number, remember that, it's going to be very important. It's a very important number, and depending on what type of numerology you like to use, number 6 could be tied into Venus, and it's no surprise that we are talking a lot about money, and Venus rules money. We don't get into too much astrology in course 1, but I just can't help myself when we get into these settings. I love to drop those little nuggets of knowledge for you. So, Ray, thanks again so much. Vipka, you're in great hands with Vipka, Wyatt, Puyan, all the other analysts, Ulrich, Kat, all the original MMTA students. It's always a pleasure to be with you all. So thank you.
Thank you, Johnny. Thank you very much. So the first 3 people you met are the teachers. They're all teachers. That would be Wyatt, Puyan, and Johnny. The next person I'm going to introduce you to is also a teacher, but she's also a mentor. This is Rita Perea, who has an interesting story of what brought her into MMA. Her background has been in education. She served as both a teacher and a high school principal. But I believe her greatest skill set is her contributions to understanding the psychological processes that one must go through to becoming a successful trader and investor. She's helped many traders through her unique approach toward coaching skills. So Rita, with that introduction, I'm going to bring you on now to please share with us what MMTA has meant to you in your own words, and describe in your own words the importance of mean periodicity in understanding what cycles are all about. Rita? Are you with us, Rita?
Rita, you're muted.
There we go. I'm so
There we go.
okay. Thank you, Ray. That was a very kind introduction. And it's such a great pleasure to see everyone that I studied with and my teachers and the new students who are here today. Welcome, everybody. We're so excited about MMTA4 and what a great start to the program so far. So as Ray said, this was a life-changing program for me. I have always been very, very interested in psychology. And what Ray doesn't know is that when I was in high school, I wanted to be a psychologist. I went to my high school guidance counselor and he said, "Oh, yeah, the best way for you to do that is go ahead, become a teacher, and then you'll get to be a psychologist later on." Well, that sort of didn't happen just in that way, but it is now beginning to happen or ending to happen. I'm now a PhD researcher in the area of financial psychology and trading psychology and beginning the writing of my dissertation. So while I'm working with MMTA4 and teaching and mentoring, I'll also be doing my own research about trading psychology. So I'm so excited. And this wouldn't have happened had I not had a consultation with Ray a couple of years ago, who said, have you ever thought about being a trading psychologist? And I said, oh my gosh, I don't know what that is, but I think I would love that. And guess what? I love it. So mean periodicity. So you heard Vipka talk about looking at the lows in the market and why that's so important. And Ray talked about this too. It's important that we identify those lows for the buying opportunities. And with the mean periodicity, this is also called a normal cycle length. It's also called the midpoint. And it's very important to identify all of the lows in a particular market cycle and look at the range of the lows within that cycle. We're going to look at the 80% grouping within that cycle. And as the example in your workbook shows you, we'll be looking at what is the beginning point of those lows, what is the latest point, biggest length of those lows. And we're going to be seeking to calculate the midpoint of both of those. So with crude oil, we're looking at, in this example, 15 weeks in the market as the lowest part, and then 23 weeks in the market as the other part of the range. And so that would be the range, 15 weeks to 23 weeks in this example. And the midpoint of all of that, or mean periodicity, or our normal cycle length, is a 15. Oh, I'm sorry, it's 19. Sorry about that. And that is really important because we need to look at when might that market provide a dip and perhaps a buying opportunity. And this is just one part of the many layers that we'll be looking at through these 2 years to be able to identify when those great buying opportunities will be. Thank you. Thank you, Ray.
Yes, thank you, Rita. And that was a good example, use the crude oil, because it does have a 15 to 23 week cycle. The example we have on the screen here, we show here is very similar. It's a soybean cycle, 18-week cycle, 15 to 21 week. But you'll find that many markets have an 18, 19-week midpoint, as Rita put it, between the beginning and the end of the ranges where 80% of these cycles occur. So this is a very important concept to understand when we're trying to identify what actually is the cycle length. It's a midpoint between the earliest and the latest cycle that occurs when 80% of our experiences. Okay, with this, I am now going to turn it back over to Vipka, who's going to introduce some other mentors and teachers to explain and continue with their explanations of the glossary of cycles. Vipka?
Thank you, Ray. And thanks for everyone so far. Great job. I have the pleasure now to introduce Jonathan Jayraj. And he's a fellow MMTA4 graduate, a dear friend of mine, and a gifted software developer. He and I worked side by side during the MMTA4 program on a research project for the NASDAQ, and we were able to calculate specific CRDs for that particular market, which are now published in the tech report. He is also the brilliant mind behind the MMA Solar Luna app development, and his expertise and dedication are invaluable when it comes to any software-related project. So I'm truly grateful to have him as a mentor in MMTA4. So Jonathan, please introduce yourself briefly, and your glossary term is orb.
Well, thank you for that. Hello, guys. Kind of like how Vivka said, I can't believe a year has gone by since we were all graduating and becoming, just becoming like graduates of the program. And now a year has passed and we're here again, starting yet another round. And I can tell you guys that experience is worth it just from that perspective. Is you're all going to really it's all going to blow by really fast, and you're all going to be very grateful for whoever winds up in that place. That's where you're meant to be. And I mean, my short story of how I found Ray was I don't have a finance background, I don't have an astrology background, but I'd been doing a lot of personal astrology with someone I trusted a lot, and he had heard of all my failures at trading in the pandemic era, and he was like, "Hey, you should check this Ray guy out. He's got, he uses astrology and finance." Okay, well, it can't be worse than what I'm doing, right? Like, it's like, so I booked a ticket to Detroit, and I went to see Ray during one of their MMTA classes, and with some humor, like, life put me in the car in an Uber with one of the other mentors, Will, and I had no idea at the time that both of us would still be here, but definitely because of that, like, fateful weekend, I wound up committing to the path and starting, like, what would end up becoming definitely one of the better things I've ever done in life. Have had a lot more experience and a lot more just enjoyment than I thought I would. And I mean, I am at the very beginning of this journey. It's like, all right, I'm only a couple of years into this method and already feel this way about it. And some of the people here are already, like, a decade into it or more. And so then I look forward to them. I look up to them and, like, oh, well, I'm looking forward for my own decades of this, So that said, like, happy to see everybody here, and let me read you what I think is, like, one of the easier definitions. I get the easy one. Orb, an allowable time before and after the mean periodicity, with an often default value of 1/6, unless you guys find a formal study suggesting otherwise.
All right, thank you, Jonathan. And there was a question in the chat real quick about mean periodicity, because we're going to mention that a bit later on again. Let me just quickly jump back to the slide before, and there was the request to go through this chart. Hold on, I wanted to go back. Ray, can you click back in the slides? My control doesn't work. And yeah, wonderful. Yeah. So the request was to go through that soybeans chart one more time. So what you see here is 3 primary cycles, and they have a length between 17 and 20 weeks, right? So the shortest is 17 weeks, the longest is 20 weeks. And if you calculate the midpoint between those lengths, you end up at 18.5. So it's either 18 or 19 week mean periodicity. In the example mentioned for gold is the observance of 80 time the cycle low occurs between 15 and 21 weeks. So down at the bottom of the chart, you see that time range where I highlighted that. So 18 is the midpoint of that earliest and latest length of the cycle. So 18 is the midpoint. So we're going to come back to this. Don't worry if you don't understand everything right when we explain it for the first time. We're going to come back to these concepts a lot of times. You also have the workbook in your hands, and we can always come back to it. It's the first class, and it's a lot that we're throwing at you today. So we will have ample time to solidify and repeat those concepts. So don't worry, and just maybe go along with it for now. And I'm sure we can get everyone on the same page. Okay, good. So we're going to continue, and going to the next slide here again. We now have Kat Powell, and it's such a pleasure to introduce Kat, who graduated from the very first MMTA program and has been a longtime associate of MMA. She's a highly skilled astrologer, a very successful investor and trader with deep expertise in the MMA methods. And she also brings a special talent for graphics that many of you will recognize throughout the program. And Kat will be also teaching some of the lessons and also is on our mentor team. So I deeply value her wisdom and expertise, and I'm so grateful that she is part of the MMTA4 faculty team. So Kat, over to you.
Hello, everyone. Can you hear me?
Yes, we do.
Okay. Thank you, Vivka. That was kind. I appreciate it. Yes, I'm one of the OGs, the original girls of the original MMTA program. We finished in 2014, and many of us stayed on to work on one of the first programs that students wrote. We started the International Cycles Report. Many of the students of that program contributed, and that was carried on later by other students. But we launched that first secondary subscriber package for Ray. And the biggest thing you need to understand is if you're really going to be serious about this, you can't just learn it, you have to use it. You have to literally do the homework. You have to not just take what you're being told, you have to find the curiosity to do your own research so that you can really absorb. Because I explained, like the last time I taught, if this is a snowball, okay, this is not linear learning. This is accretive learning. You have a base of knowledge from whatever you come from, astrology or financial or other things, or you're visually oriented. And then you keep adding to that. And it slowly becomes larger and larger and larger, and the linkages form and it becomes more complex. But you start with a base knowledge, and it's your gifts, your curiosity, your interest, your focus that makes it special to you as an individual. So you're starting a journey, and what you bring to the journey is what you will get from it. With that said, I had done astrology before I did this. I was a subscriber to Ray's reports, but taking his course really changed my life, and it has the opportunity to do so for you, each of you. With that said, the range is the time that covers the shortest and longest cycles allowable within its normal cycle periodicity. Okay, so if it's an 18-week cycle, you take your 1/6, which is 3 weeks, 18 divided by 6, 3 weeks, and then you subtract that and add it, like on a timeline, minus and plus. So 18 minus 3 is 15 weeks, 18 plus 3 is 21 weeks. That's your range. Why is this useful? Because it's all about managing expectations. When you're moving into you're counting cycles and you're looking for that important cycle change point, which is a low, or other portions within the cycle, you have to allow a little wiggle room sometimes. So this range is your wiggle room, your historical wiggle room for how long a cycle typically is, how short it can be, how long it can be. Right in the midpoint is the 18. but this is the flexibility, the stretch of a cycle that you have to be prepared for. And that's how range works. Back to
Thank
you,
you, Kat.
Vika.
Thank you. Thank you for the great explanation. So next up, we have Will Holbrook, and he will explain to us sorry, I have a bit of a problem clicking the slides. Hold on. So he will introduce to us the glossary term market cycles, and I'm thrilled to introduce Will because he's also a fellow MMTA4 student and graduate whose dedication and discipline in research are unmatched. He is not only a very successful investor and trader applying the MMA methods, but also brings valuable experience from the financial industry. Will was actually the one who discovered the daily cycle by examining a lot of data and researching and plowing through that. So we were all very impressed by that during class when he did this presentation on it. So I'm extremely thrilled to have him join the mentor team for MMTA4 as well, and bringing his expertise to the table. So Will, over to you.
Thank you, Vivka, and great to see everyone. Thank you, Ray. Thank you, everyone, that I see here from all the different the cycles of time that I've been introduced to MMTA through. So some of you I met in 2022, and then it was joining MMTA3, and now excited to meet more of you as we go through MMTA4. Yeah, like Vivka said, I have experience in the financial industry, but I wasn't in finance when I was introduced to Ray's work. I came across Ray's weekly report in 2021, and similar timeline to Jonathan. I was struggling in I had no experience in finance or with astrology before the pandemic. And then I started spending a lot of time learning about financial markets, and that was such a crazy time to be in the market and everything. And so I think that honestly, being introduced to Ray's work is what really began a long-term structured and professional approach to markets and to trading and investing. That was really the seed that is now continuing to grow and sprout new trees even. It's just beyond the original trunk, if you will. So I'm looking forward to helping everyone on their journey as a mentor. I have spent a lot of time. This has been my life, has been taking on this journey for the last few years to educate myself in finance as well as astrology, because astrology, after discovering Ray's work, has had a gigantic impact on me psychologically. So there are really two things that become pillars of my life. And I owe that to being introduced to Ray's work and to the foundation that he set in place, and that I have been able to grow off of. And so the other thing that I want to say before getting to the market cycles here is just some words of encouragement for everyone as you're starting this exciting new venture. The work that you do in these courses, in particular during the research projects and the tests, all of this time that you're spending and the capital that you're investing to grow your business here, all of this action that you're putting forth is preparing you for future profit, hopefully, because there's no guarantee of that, but there's no guarantee of it because it's dependent on what you choose to make of this process. And so there are going to be extreme swings in many markets over the next 2 to 3 to 4 years. And when those times come, you're going to have an opportunity to participate in those without or with leverage. And everything that you learn here throughout this process is going to be instrumental. So by doing this, you're giving yourself the tools that are going to make it possible for you to execute with a much greater degree of confidence, understanding, and detail. So that is a very exciting thing. And I would say to give this process time, trust the process also. This is going to be very much like setting out to sea. And when you're first getting out of the harbor, the waters are a lot more choppy than they are when you eventually get out to the ocean and you can just, sail with the current. So, at the very beginning here, when you're getting out into the further layers, there are moments where you're going against the grain. And by pushing through those and by continuing to persevere, you will get out to the ocean, and it's awesome being out there. Okay, so market cycles. Cycles are measured from trough to trough, so from low to low. And the cycle is named by the length between those two troughs or those two lows. So an example would be a 6-week cycle, a 9-week cycle, an 18-week cycle. 6-week cycle would be you have a low, an isolated low, and that is following cycle structure, and then 6 weeks later, you have another low that completes that portion of the cycle, or that cycle, I should say. So 6-week cycle is low to low, and it's the same with the 9-week cycle and the 18-week cycle. These are 6 or 9 or 18 weeks apart in length within the allowable orbs and normal ranges. So an example of that would be, and these cycles break down, these are each phases of the cycles that are ongoing. So, the 6-week cycle, you have a 6-week cycle, a 6-week cycle, and the third one would be completing the 18-week cycle. What that will look like in practice is these will land within the allowable orbs and ranges. So the 6-week cycle, you may see a low in week 5. And if you're, then getting ready for that next 6-week cycle, you may see a low in week 12 after there's a low in week 5 that gets identified as a 6-week cycle low, and then a low in week 12 off of the original low that started the 18-week cycle. And then for that third phase, that may come in at 17 weeks. Again, 5 weeks after that low in week 12, 17 weeks, or maybe 18 weeks or 19 weeks. So that is how the allowable orbs and ranges are impacting those. And those are the allowable orbs and ranges based on all of the historical data of these cycles that you are mining for, and that you'll be able to track here. And then if we
Awesome.
go, yeah.
Oh, sorry, I didn't want to cut you off. We need to move on though.